Hey guys, Stock Saturday, and it's a slightly down week for me and the market from the looks of it. I'm down about just over 1.5%. The S&P and the Nasdaq is down sort of just below 1.5%, so nearly in line, slightly underperforming. Different things for me, of course, but yeah, they're all sort of on the way down. Um, yeah, not a huge amount of earnings this week, but I have made rather a big sale and sort of a historic sale for the portfolio. So let's take a look. So Sylvania Platinum is one that I've held for a good couple of years now, and I've decided to sell half my position. It's obviously ever so slightly in the red actually now. I sold, didn't quite get this sort of last run up. I sold Wednesday, I think, for no, Thursday for about 73p it went through at. And yeah, it's sort of risen slightly since then. So I've sort of sold slightly in the red on a capital basis, but in the green if you include dividends. So yeah, I missed maybe some of the sort of 2021 general stock run up, but sort of it's in the green considering 2022. So I would say it's sort of sheltered me maybe from some more losses for 2022. But yeah, I decided to sell a bit off. So the main reason for the rise over the last few days does seem to be the annual results that came out, which we isn't sort of really any new news. It only goes up to Q2, which we already had the results for. It's just sort of consolidating it into the full year and sort of giving a few extra bits and pieces. Sort of, I can't remember whether they announced the final dividend before, which I always think basing anything on the dividend is a bit silly. We knew how much cash they had on the balance sheet at in sort of the Q2 results, and yeah, whether they sort of keep the cash or give it to you as a dividend doesn't really change the share price, in my opinion. Some people it seems to, a big dividend sort of suddenly means they'll buy up the shares, and it's sort of up reasonably fair amount this week. So yeah, that was part of the reason for the sale, really. The company hasn't got suddenly better because they're paying a bit of a dividend. It's just some of the cash on the balance sheet giving it to you. But there was also the outlook. I don't think this was quite as detailed before. They've made their purchase or their sort of joint venture that they've started with the new company, sort of doing getting into chromium, which is a bit of diversification, I guess. But from what I understand, it's sort of quite an abundant metal. It's not as if it's sort of some rare thing that everyone needs. It's very sort of commodity, low price ish stuff that lots of people do. So yeah, it might mean more revenue, but I don't think it's anything all that special. July, they've said that they've announced 3.6 million worth of buybacks, and they're going to carry on doing buybacks, which yeah, they got to do something with the cash. And annual production target for the full year in the next 12 months will be pretty much what they've done in the last 12 months. So yeah, nothing sort of hugely surprising there. And come over to the quarterly results. Obviously, this is what I was looking at when they were released, and it wasn't all that good because the basket price has come down quite a bit. Sort of net profit down from 6 million for the third quarter, which wasn't all that good, to 3 million in Q2. So that's not really good at all. And just take a look at the metals prices. So obviously the net profit for the second quarter, sort of at 3 million, was during this period of Q2, where you had platinum, for example, sort of in the 1,000 to 1,100 range, and it sort of spent pretty much all of Q3 in the sort of 900s range. Palladium, I think, has been slightly worse off. So, yeah, that was sort of $1,500, and again it spent Q3 at, well, yeah, $1,200 really. And then rhodium obviously is the largest revenue, or always has been the largest revenue item. That was for most of Q2 in the sort of $7,000 range. A little bit of time at sort of in the sixes in June, but then it is pretty much flatlined for most of Q2 at sort of $4,100. You see, it's actually not moved since 25th of July. This is obviously not a particularly liquid market. Whether this is actually the price that people are trading at, I wouldn't imagine. It's completely unchanged since then, but that's what they're tracking. And yeah, that's obviously going to feed into the next quarterly results, and we might even get showing a net loss, even if it is under their cost of production is under their basket price. You have all sort of general admin costs and that sort of thing sort of to go into that as well, and I think there's probably an element of marking down investments, so sort of non-cash items, write-downs and that sort of thing, which could show a net profit even if they aren't actually losing money at those prices. But yeah, just sort of think they're going to be coming out end of October, presumably, and then sort of first couple of weeks of November, and I would imagine they're going to look appalling. As I say, potentially a net loss. You've got cash on the balance sheet, fair enough, but can only sort of get people so positive if they're showing heavy net profit loss and drop in revenue. Then yeah, it's not going to be great, and that's sort of going to be the rest of the year. Unless prices really pick up, people are going to be sort of thinking the Q4 results are going to be pretty poor in which would be sort of February time. So basically, if we're sort of going into a recession potentially worldwide, certainly in sort of the US and UK look like we're going to, and Sylvania's results are sort of looking bad already going into the recession, then I can't really see it, because these aren't sort of, they're precious metals, but they are industrial sort of heavy metals, and yeah, you would expect a sort of bit of a downturn with that as well. So yeah, just not really particularly positive, basically. If you take even the this was calendar Q2, 3 million, sort of, if you were to annualize it at that rate, then you're looking at sort of $12 million in profit, say £10 million. If you don't net the cash off, you're talking 20 times earnings. So Sylvania has never really been at 20 times earnings. Obviously, if you net the cash off, sort of £100 million, say, then yeah, you get to sort of 10 times earnings maybe. But depends how far people are looking into the future, whether they're thinking 6 million, 10, 20 million net profit can come back. With the sort of electric vehicle market being a bit of a headwind, basically indefinitely to the company, then I'm not all that positive that I was holding a very large position in a penny stock that basically I'm hoping this rhodium price to sort of come back up, and that relies on petrol and diesel vehicles, which I'm not obviously super bullish about. It was more that the regulations for the vehicles that they are producing, especially in sort of China and the EU, the sort of reducing amount of vehicles would need more platinum group metals put into them. And that just sort of seems, I've been saying it on Discord, sort of reminds me of a tobacco company, really. Sort of falling sales, but increasing the price. And that sort of seems like the industry that you would never get a very high PE for. So there's very little hope of sort of PE expansion to increase this 200 million, and if revenue is going to decrease, then who knows? I mean, it could increase. You could sort of suddenly get an uptick in rhodium. It's an incredibly thinly traded market, or potentially the hydrogen market kicks off, which, from what I understand, it would only use platinum, and they are sort of trying to find ways to not use platinum. So, yeah, I didn't really see too much to get all that bullish about. I have kept half of it. I was very tempted when it's run up to in the sort of 79p range on Friday, basically, from what I understand, just on the dividend, because I couldn't see anything else particularly positive. I could end up selling the rest maybe this coming week. So we'll see. On a slightly more positive note, even though the price is going down as well, with Bitcoin going down, we had the August CleanSpark results. So I did my video on CleanSpark, sort of update, and updated my model, and I did say this would be coming out shortly and sort of could affect the model if it was worse than I'd predicted, but it doesn't seem to be, so that was pretty good. 659 Bitcoin mined, which is pretty much right on the money, and they're now at 9.3 exahash, where I was sort of predicting they were going to be at 9 dead, so that's pretty good. And they're not selling still. They've sold 43 Bitcoin out of those 659. And they now hold 1,677 Bitcoin, which before, when it was sort of 100 and 300, I was saying, obviously that's not a big holding, but yeah, this is sort of about $43 million now. So it's sort of over 5% of the market cap just in held Bitcoin. And they do hold more cash than debt as well. So yeah, you're just starting to get a nice little buffer, even though the Bitcoin price is a bit down. And then with the 9.3 exahash, they should sort of be continuing at this rate, if not ever so slightly lower, with difficulty increasing. But yeah, I was pretty happy with that. The only negative they have had is they're saying the big expansion, the Municipal Energy Authority of Georgia, they expect to complete the substation in 2023, but the related power line that connects the substation is pushed into early 2024, after which time the miners will be energized. So it looks like they're not going to get to 16 exahash by the end of the year. It's going to be sort of, whether they mean February, March time, who knows? But yeah, that's not particularly good news. It doesn't really affect my model, of course, because I was looking at basically the year after the halving, sort of 1 year from the halving in April time. Having the 16 exahash before sort of Christmas time, or around Christmas time, would have just given you that nice sort of January to March before the halving of sort of great big amounts of Bitcoin. That would have been sort of probably over 1,000, getting towards 1,050 Bitcoin for January, February, and March. So just a nice bit of cash in if Bitcoin's at a reasonable price there. But yeah, if it's going to be sort of basically 9 or 10 or so until then, and sort of going up to 16 at the halving near enough, then yeah, fair enough. Like I say, that's what I'm basing my targets on, and sort of looking to end of 2024, 2025 time after the halving, with them having sort of 16 exahash or maybe a bit more. But we'll see how they go. These are sort of reasonably good numbers and basically on track with what I was hoping for. So just looking at the news, there wasn't a huge amount of news that I saw this week that really sort of piqued my interest. You had some sort of PPI, inflation data, and bits and pieces, and then Wednesday, not too much until we got the ISM news. So This is basically economic indicators, how sort of a survey of how businesses think their business is going and how they think the market is going, and yeah, all high for the US. Sort of non-manufacturing business activity ever so slightly higher than last month. Employment quite a bit higher than last month. So maybe the Fed don't like that. They don't like the labour market sort of being super hot, and sort of for it to be still high in August, they're going to think we're not breaking the market yet. So that's not too good. On manufacturing new orders, so them sort of ordering new maybe buildings and yeah, all sorts. It's not sort of manufacturing plant and that sort of thing. It's orders for non-manufacturing companies. That's up from last month. And the non-manufacturing PMI, that's the big sort of basically just the survey of how the businesses see the market and their business. That's the only one that has a consensus number every month, and that's up from last month. And or was it? It was expected to be ever so slightly lower than last month, but it was 54.5. So above 50 is expansion, not recession. And yeah, 54.5 is a very high number. So we'll see what Powell makes of that. The FOMC's on the 20th, I believe. So yeah, who knows? And you had the Halifax House Price Index. That was quite a bit worse than expected, but I believe is in line with nationwide now. So yeah, maybe they're just sort of catching up. Not sure why the forecasts were so low. That's a bit of a gaffe, bit of a miss, but not good at all. So it was 2.5% down from last year in the previous month. It's now 4.6% down. So house prices starting to drop off, but that is basically the same as nationwide, as I say. Jobless claims sort of down from last month, and initial jobless claims down. So strong labour market. And that was about it. A few sort of FOMC members speaking and that sort of thing. Not really a lot else to talk about. So portfolio-wise, not a lot of change, to be honest. Process sort of struggling a little bit. Taiwan Semiconductor struggling. Back down under $90. Don't think we've got the monthly revenue for TSMC just yet. Broadcom sort of has been trading blows between sort of 850 and 900. Did get above 900 very briefly, but that's come down. Himax come down below $6. So I'm buying more options, gambling on that. And yeah, the miners sort of coming down ever so slightly again. They sort of got to 50. Wondering whether this is the oil price going up, sort of increasing their costs, while the metals prices aren't really sort of increasing in parallel. So same price to sell and increased costs. So yeah, Vale sort of and Glencore both took a bit of a ding, but still got my Porsche there as well. That's potentially on the sell pile. We'll see. So on the ISA side, this is where I sold my Sylvania Platinum. That's now down to just under £5,000 holding. And that was put into Coeur Mining, no surprise there. Equinox Gold. I didn't go with Fortuna Silver Mines because I just sort of prefer the looks of the other two, mining-wise. And so I decided to put it into CleanSpark. Sort of thinking, yeah, we could go down a reasonable amount more from here, but it was sort of pretty much at my average cost in the account. Its average cost is a bit lower in the IG account, but I thought, yeah, fair enough. Yeah, and just sort of thinking we could see Bitcoin down to 20,000 maybe. I would think it would be relatively short-lived, but it depends what happens. If we get a reasonably bad sort of global recession, then yeah, it could obviously go lower, and it could stay there for a bit of time. But if we don't, then or even if we do and we get a very quick sort of money printing, as Jerome Powell has sort of said that he would consider, that's, you know, he said we have tools for over tightening, then I would expect a very quick sort of V-shaped recovery for Bitcoin, and so CleanSpark. So kind of thinking, you know, the downside is you know, $5,000, maybe $10,000 down for Bitcoin in the worst case, and sort of, you know, upside potential of like $60,000-$70,000. So yeah, kind of thinking CleanSpark would be the same. They've got also got a little bit of cash on the books now and Bitcoin on the books. So albeit it wouldn't be nice to have to sell that to pay the bills at lower prices, but it is just sort of a little bit of a buffer. So yeah, decided to put some into there. Not a great deal of change in the IG account. I'm not showing it here, I've actually got £150 cash from sort of various dividends. I don't really track the account all that much because I don't really like trading in there because it's $10 or £10 a trade for most things. So I am still trying to move this to Interactive Brokers. I did get my email from IG as well to say if I don't make any trades before September, the end of September, then I'll be charged £24 for holding the account, a custody fee. So if I make, say, one trade and it costs £10, then I'll be charged £14. So it's sort of incentivizing you to trade, but yeah, buying something for £150, I might just do that and you know, reduce that fee a little bit, maybe just buy some more CleanSpark or something. But it's so annoying, and that's why I want to move. But Interactive Brokers aren't doing in-specie transfers for IG yet, so I'd have to sell all of my holdings, move the cash over, and rebuy. By which time, you know, who knows what could happen to CleanSpark, really. That's the main one that I would sort of be nervy of selling. You know, you sell Bitcoin ETF, gets approved while you're moving the cash and it goes up, you know, 25%, and you miss out. So I would rather do it in specie if possible and just sort of put up with maybe £24 a quarter charge. So Interactive Brokers, Baidu and Alibaba, sort of sitting where they are. I do need to, I really should see if I can change these to the Hong Kong listings because that is what I hold, and they are actually sitting a little bit higher than these. I think Alibaba is at about 2,800 for my holding, so doing a little bit better than the US ones. Whether that's sort of fears of delisting, I'm not sure, but yeah, I will see if I can change these to the Hong Kong listings. And then options, because I've been hammering into options, spending some of the Porsche sale money, and I should have maybe another 1,000 just from salary to add to the options. It's still what I see as the most bang for the buck at the moment. It would be sort of tempting maybe to average down on some of my cryptos, but yeah, I see sort of a lot more potential in, well, basically in the underlying investments, of course. The miners are sort of leverage play on gold and silver, which I see as sort of safe and potentially going up. So obviously the miners are leverage on that, and then the options are leverage on the miners. So it's leverage on leverage, admittedly, but on a sort of a fairly safe asset. Obviously, if they don't move, then there is potential for pretty much all of these to go to zero. That is the risk with options. But again, sort of asymmetric risk. If what I'm expecting does come off, even a sort of, say, a 20% rise in gold, which isn't sort of out of the question, if they do a bit of money printing for the recession, then yeah, you could get, you know, a 10x for Equinox options. So that sort of upside potential compared to sort of losing £1,000, which is you know, a very small. If you take all of the options, it's £5,000, so about 2% of my portfolio, a bit less than that, I think. So yeah, it's worth the risk, I think, for a sort of potential 10x or more. So that's where we've gone. So I've bought more Core Mining, a lot more Equinox, bought 2 more Clean Spark, and quite a bit more Himax. Keeping that somewhat low because I still think it may do sort of very badly in a recession rather than gold and silver sort of doing quite well in a recession. But yeah, I do sort of buy a little bit of Himax, just seeing whether that could move. So yeah, that's portfolio for the week. Let us know what you're buying, if you're sort of taking profits on anything to average down, and yeah, what's happening. So leave your thoughts in comments below and like and subscribe. See you soon.